Subscribe to my channel and hit the bell icon so you never miss any video from my channel.
Well, hello friend, we got a new video for you on financial accounting objectives. And I'm very sure that if you watch the full video and learn all the MCQ which we have covered in this chapter wise, I'm very sure and definitely that you will get the very good marks in objective sections, and I'm sure that will help you to qualify the financial accounting chapter in ICWA CMA. So guys, let's start this video. Let's start with the first of all the match of the following. Here is the column A and column B. The questions are, first of all, I left it on the screen for you to give the answer, then we will discuss in the next slide about the answer. So you just start, what is the cash discount, credit transaction, liabilities, contingent liabilities, loss, and the column B, which we have to match it with the obligation that may or may not be materialized, excess of expenditure over income, transaction without immediate cash statement, amount owed by a business to external parties, allowance by seller to buyer for promote payments. So guys, I'll wait for 10 seconds for your answers. You stick down it and write it, one example 1C 1D, that you will get an idea that what is your revision going on. Thereafter we will see the its solution. So the time start now. So let's see now the solution of this 5 questions, which is match of the following in this slide. So I hope all of you have done the correct answer. Let's match how many of you are correct. We'll talk about the cash discount. The answer will be E, allowance by seller to buyer to promote payment. Next is credit transactions, which is transactions without immediate cash settlement. I mean, like whatever the credit you are giving the anyone, you are not giving the cash payment, right? You are giving them the material or whatever the products on credit basis. So obviously transaction without immediate cash settlement. Then the next is liabilities. Third is what? Liabilities. Well, the answer will be D, amount owned by a business to external parties. When next question was contingent liabilities, whose answer option will be, and the answer will be obligation that may or may not be materialized. Contingent liabilities, option A, obligation may or may not be materialized. And then question 5, that is loss. Loss is nothing but the excess of expenditure over income, that is option number B. So guys, here we had the 5 questions from the first chapter of financial accounting. I hope all of you must have the correct answer. In case some of the answer went wrong, then don't panic, just to write all these questions and with answer, or take the screenshot of with your mobile phone. That will be best for you while doing the revision. Let's see the next. Now, as you can see, the second question is regarding the fill in the blanks, and you can see on your screen that the first question is fill in the blanks is the branch of accounting that deal with the process of ascertaining cost. So what will be the answer, guys? I'll wait for you for 3 seconds. 1, 2, 3. I hope you may have some given the answer. If not, I have the second option for you. I have the options for you, like cost accounting, financial accounting cycle, net worth, or current. Dear subscriber, dear viewers, do you have any idea now? So I repeat once again, the question fill in the blanks is the branch of accounting that deal with the process of ascertaining cost. The branch of accounting that deal with the process of ascertaining cost. If some type of question will be asked in exam, then the option will be, please write down the answer. I suggest answer, write it down. The answer is cost accounting. COST, cost accounting. ACCOUNTING, accounting. So cost accounting is the answer of the first question, that cost accounting is the branch of accounting that deal with the process of ascertaining cost. Cost accounting is the branch of accounting that deals with the process of ascertaining cost. Now let's see the next question. The main objective of accounting is to provide fill in the blanks information to the stakeholder. So guys, any idea? This is a very easy question. If not, options are financial accounting, accounting cycle, finance, net worth, what? So well guys, the options I have told you, and the answer, before the answer I repeat once again the question. As you can see in your screen, the main objective of accounting is to provide fill in the blanks information to the stakeholder. So well, you have to provide the information. What information? So financial information to the stakeholder. So answer will be financial, FINANCIAL, financial information. I hope this is clear to you now. Now next question is, when complete sequence of accounting procedure is done, which happens frequently and repeated in some direction during an accounting period, it is in what? I repeat once again, question number 3. And when complete sequence of accounting procedure is done, which happens frequently and repeated in same direction during an accounting period, it is called what? So guys, as you know, it is repeated, it's a periodic thing, so answer will be accounting cycle. I repeat, accounting cycle, spelling will be ACCOUNTING, accounting cycle, CYCLE. Once again I repeat the question and answer. When complete sequence of accounting procedure is done, which happens frequently and repeated in same direction during an accounting period, it is called an financial cycle. Okay, now let's see the question number 4. Fill in the blanks represent the excess of total asset. Fill in the blanks represent the excess of total asset over the total liabilities of a business. I repeat, what represent the excess of total asset over the total liabilities? So answer will be its net worth. Net worth is nothing but the excess of total asset over the total liabilities of a business. Now next question, 5th, a liability that is expected to be settled in an entity's normal operating cycle is called what? What liabilities? Once again I repeat, a liability that is expected to be settled in an entity normal operating cycle is called what liabilities? So if it will be settled in the normal operating cycle, not preceding, not past, normal operating cycle, then the answer will be current liabilities. I hope the answer has been clear to you. So guys, once again I repeat, as you can see the screen, as you can see the questions on the screen, the options, first answer was cost accounting, if you can write, second was financial, third was accounting cycle, fourth was net worth, and fifth was current. I hope all of them have done very carefully, and if not, now here is the question. This question is true or false based question of the first chapter, right? So the question is, the transaction of a business are recorded in the journal chronically and in a classified manner. The question was whether it is true or false. The transaction of a business are recorded in the journal chronically and in a classified manner. I have told you that in the journal they used to transaction chronically and classified manner, whether it is true or false. So guys, the answer will be false. Okay, so let's see. I hope you will able to answer the next question at least. The question is, bookkeeping being a routine and repetitive work in today's world, it is taken over by the computer system. I repeat the question, bookkeeping being a routine, bookkeeping being a routine and the repetitive work in today's world, it is taken over by the computer system. Well, it is true or false? Guys, any answer? So, well, the answer is true. So, those who have given the answer, congratulations, you are going in the correct directions. Well, the next question is information about the financial position of a business is primarily provided in the income statement. I repeat, income about the financial position of a business is primarily provided by the income statement, whether it is provided in the income statement or balance sheet. So guys, just think, I have given you some hint. So the question is information about the financial position of a business is primarily provided in the income statement. Is it right? So well, the answer is false. So let's see the question number 4. Trade discount is allowed by seller to buyer for making prompt payment. Well, I repeat, trade discount is allowed by the seller to buyer to make prompt payment. Is it right? Think guys. So well, the answer is false. Trade discount is not allowed by the seller to buyer for making a payment. Well, next question is, 5th is management accounting is primarily based on the data available from financial accounting. Well, talking about once again the question number 5, finance management accounting is primarily based on the data available from financial accounting. Is it right? As you can see, it's a very easy question. The basic is financial accounting, and all the cost accounting, management accounting, all other these are the primarily based on the data available from the finance account. Is it right or wrong? So I think you got the hint, and absolutely the answer is true. Let's see the question number next now. Well, dear friend, as you can see on the screen, the next question is regarding the match the following. So questions on the column A, you have to match with the question options with the column B. So like the first is cash book, second is sales book, third is sales return book, fourth is purchase book, fifth is purchase return book. On the second half, column B, you can see the options are credit note issued to debitors, cash memos, debit note issued to creditors, inward invoices, outward invoices. So I'll give you some time to give the answers. Right, you can take out the notebook and write the answers. Like question number 1, what will be the option? Just write down the options number and let's match. So I hope all those have done the revision, those have must be completed the work, or those who have not done and unable to give all the answer, no matter, because you have to remember, just do the revision. I'll give the answer and do the revision. So here is the answer for you. So for the cash book, the answer will be cash memos. You have first question, option is B, cash memos. Second question, sales book, answer is outward invoices. Sales return books, so here sales is returning whatever you have sold to the customer, it is returning back to you. So it will be, you have to be the credit note issued to the debitors. Notes will be issued to the debitor. And if it is purchase book, then obviously inward invoices. If you have buy something, then inward something will comes. If you sell, then outward invoices will be there. Purchase, inward invoices will be there. I hope these are quite easy for you. And for the sales return book, then credit note issued to the debitors, and same with purchase return book, then answer will be debit note issued to the creditors. So I hope we have answered it very carefully. Let's see the next question now. Friend, here is the question. Now the question is fill in the blanks. As you can see on the screen, the first question is fill in the blanks. Concept: treat a business as distinct from individual who own or manage it. I hope you must be aware about this question. The fill in the blanks, whatever the suitable word for this fill in the blanks, that concept treat a business are distinct from the individual who own or manage it. Anyone of you? Well, the answer is, please write it down. Either you can say it's a business or separate entity. So answer will be either business concept treat a business distinct from the individual who own or manage it. Now the next question is, the left hand side of an account is called what? Debit, credit, while the right hand side of an account is called what side? Debit side, credit side. So will the left hand side, obviously it's very easy question, is debit side, well, and the right hand side is nothing but the credit side. Now question 3 is, the widely accepted set of rules, conventions, standard and procedure for reporting financial informations are called. I repeat the question. The widely accepted set of rules, conventions and standards and procedures for reporting financial informations are called what? So the answer is GAAP, GAAP. Okay. Next question is, fill in the blanks. What basis of accounting is a method of recording transaction by which revenue, costs, asset and liabilities are reflected in the account of the period in which actual receipts and payments are made? Once again, I repeat, it's little bit big question, lengthy question. What basis of accounting is a method of recording transaction by which revenue, cost, assets and liabilities are reflected in the account of the period in which actual receipts and payments are made? So well, the answer will be cash basis. Now the fifth question, what basis of accounting is recognized under the company's statute? What basis of accounting is recognized under the company statute? So well, the answer is accrual basis. Guys, accrual basis of accounting is recognized under the company's statute. I repeat, accrual basis of accounting is recognized under the company's statute. And the fourth was the cash basis of accounting and method of recording transaction by which revenue, costs, asset and liabilities are reflected in the account of period in which actual receipt and payments are made. The questions are on the screen. I read the answer. For first, it was business or separate entity. Second, debit and credit. Third is GAAP, GAAP. Guys, here's the next question. As on your screen, it is a true and false type of questions. The question is, let's start with the first question. The periodicity concept assume that a business will run for an indefinite period. On the one side, as you can see in this question, it said periodicity concept assumption, and other side it said the infinity period. So well, infinity period and periodicity, it's like kind of, you know what, so what will be the answer? I have given you the hint. The question is, the periodicity concept assume that a business will run for an indefinite period. So well guys, the answer of this question will be false. I hope you must have given the right answer. So those who have given the right answer, please comment me on the comment box. Let's see how many of you have given the correct answer of this. Well, next question is, GAAP, GAAP stand for what? What will be the answer? GAAP stand for globally accepted accounting practices. They have said that that the gap stands for globally accepted accounting practice, but this is not the correct full form of gap, hence answer will be false. Next question is, using hybrid basis of accounting, income are recorded on cash basis while expenses are recorded on accrual basis. I repeat, just try to understand. It's a very important question. Using hybrid basis of accounting, income are recorded in cash basis while expenses are recorded in accrual basis. So do you think is it right answer? So if it is the right answer, then the answer will be true. So guys, the correct answer of this question number 3 is true. Yes, under the hybrid basis of accounting, income are recorded on a cash basis while expenses are recorded on an accrual basis. Now let's see the question number 4. The component of the accounting equations are expenses, income and equity. I repeat, the component of the accounting equations are expenses, income and equity. Is it right? The component of accounting equations are expenses, income and equity. Well, not, these are not only the component like the expenses, income and equity, so this will be the false. Next is, all transactions are events, but all events are not transactions. All transactions are event, but all events are not transaction. Is it right? So well, the answer is true, correct. So this will be the answer. Well guys, here's the next question. It is a little different question. In this question, you need to recognize the accounting principle. I repeat, you have to recognize the accounting principle in the following cases. You have to recognize the principle. So I hope you all have remember the principle. I repeat, the principle are like the matching concept of consistency, going concept, historical concept, prudence, conservatism concept. So just go with this first, the accounting principle, then and only then you can able to solve the problem. So let's start. The first question is, transactions are recorded at their original cost. So the first question, which is the principle, accounting principle, who said that the transactions are recorded at their original cost? So well, transactions are recorded at the original cost. So answer is historical cost concept. Transactions are recorded at their original cost. This is historical cost concept. Original cost, historical cost concept. Next is inventories related question. So well, inventories are valued at lower of its cost and realizable value. Inventories are valued at lower of its cost. So well, this question state that whatever the inventory will be there, it will be valued. The value of that inventory should be lower of its cost and realizable value. So which is the principle? So this principle is prudence, 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 or you can say conservatism concept. Conservatism, I repeat the spelling like CONSERVATISM, conservatism concept. So what was the question? I repeat that the question was, inventories are valued at lower of its cost and realizable value. So inventory related, and that is nothing but the conservatism concept. Let's see question number C or third. Well, accounting treatment once decided should not change from one period to another. which is the accounting principle is this? Which accounting principle is this? That the accounting treatment once decided, it should not be changes from one period to another. So well, the answer is concept of consistency. So you guys, you can remember in this pattern, like this is consistently be fixed for one period or year. So this will be concept of consistency. I hope you can remember this way. It's a fix for a period, so concept of consistency will be the answer. Next is unsold stock. Whatever the unsold stock is deducted from the cost of good. I repeat, unsold stock is deducted from the cost of good available from sale to arrive at cost of goods sold. What is this? Which principle is this? It's a little bit complicated, you can say. So once again I repeat, unsold stock is decided from the cost of goods available for sale to arrive at cost of good sold. So the answer will be matching concept. So guys, matching concept is a accounting principle under which unsold stock is deducted from the cost of good available for sale to arrive at cost of good sold. Let's see the question number E now. Fifth, a business is assumed to run for an indefinite period. Well, a business is assumed to run for an indefinite period. Which principle is this? Indefinite period, it's not a fixed infinite period, we can say. So answer is going concern concept. As the name suggests, going concern, going, right? So well, the answer is going concern concept. I hope you may be able to answer it. Let's see how many of you be able to answer. If possible, please comment me on the comment box. Let's see question number next now. Well guys, next is the match the following type question. Column A, the givens in first is revenue loss, second is capital receipt, third is capital profit, fourth is revenue receipt, and fifth is revenue profit. You have to match with the column B. On the column B they have given like A is profit earned by selling goods above cost price. I repeat, as you can see in the screen, profit earned by selling goods above cost price. Second is raising of capitals. C is profit on reissue or forfeited share. Bad debits arising out of credit sale. Fee received for services rendered. So guys, I'll give you 5 seconds for you, or 10 seconds. Take your time. Till then I'm just communicating with you that please take the notebook, just write one, and in front of that write the options. What will be the possible options according to you in match the following. So if you are done, then I'll explain the answer. I'll show the answer. So guys, the first question was revenue loss, and for that D will be the correct answer for this. And D is nothing but the revenue loss. It means bad debits arising out of credit sale. So whenever you credit sale, you have no cash sale, no nothing. Whenever you sell on credit basis and bad debit arising, then that's a revenue loss. So bad debits arising due to credit loss, credit sale, is nothing but the revenue loss. Next is capital receipt. So guys, capital receipt, raising of capital is what? Capital receipt. Next is capital profit. So this is profit on reissue of forfeited share. Fourth is revenue receipt, fee received for services rendered. Next is revenue profit, that is profit earned by selling goods above cost price. So these are the options. I repeat, question first was D, second was B, third was C, fourth was E, and fifth was A. So please pause the video, write down the answer, and learn all the questions answer. Revenue loss, bad debits arising due to credit sales, so on. Please do this. So guys, next question is the fill in the blanks. So let's see the question. An expenditure, the benefit from which can be enjoyed, consumed, or used over a multiple accounting period is referred to as what expenditure? It's a very easy. What is the we invest for use to get the for multiple years? I repeat the question, you will get a better idea. Like an expenditure, the benefit, which are whatever the expenditure, I break it down, the benefit from which can be enjoyed or consumed, or you can say used over a multiple accounting period, is referred to as what expenditure? So guys, any idea? So well, the answer is capital expenditure. Okay, so let's see the question number 2. A bad debit recovery is an example of what receipt? So well, the bad debits means credit loss, credit you have given, revenue loss, whatever. So bad debit recovery is an example of what receipt? So it's a revenue loss receipt. Revenue, you can say revenue receipt. Bad debit is a revenue receipt. Next, what expenditure is a non-recurring in nature? Means you have, once you have invested, then it's non-recurring in nature. So capital expenditure is a non-recurring in nature. So answer will be capital. Next, the loss which does not arises to an entity in the regular course of its operation is known as what loss? Well, I repeat, the loss which does not arises to an entity in the regular course of its operations is known as what loss? So well, this is the capital loss. Well, the loss which does not arises to an entity in the regular courses, because depreciation are there, amortizations are there, so it's not in the current year. Next is the profit which arises from the performance of regular operations of an entity is known as revenue profit. Guys, so well, this revenue profit will be the answer for fifth. I repeat the answers. The first was capital, second was revenue, third was capital, fourth was again capital, and the fourth is revenue. So let's see the next question now. Well guys, next question is true and false type. The first question is, normally a capital expenditure involve a heavy cash outlay. Is it true? So it's a very easy question. Capital investment is there, so heavy outlay will be there, so it's true. Yeah. Next is revenue expenditure are recognized as fixed asset in the asset side of the balance sheet. Is it right? Well, they said that the revenue expenditure are recognized on as a fixed asset. No, it's correct, not correct. So it's a false. Next is revenue profit is ascertained by preparing the income statement. They said that the revenue profit, the revenue profit is ascertained by preparing an income statement. What will the income? How will it come to know that is revenue? So income statement will be the basic to prepare the get the revenue profit. So yeah, it's true. Fourth, capital receipt affect the operating result of an entity. Well, they said the capital receipt affect the operating result of the entity. So answer is wrong, false. Revenue transaction related only to the current accounting period. revenue transaction relate only to the current accounting period? Revenue, obviously, if it's a revenue generated, so revenue we will discuss about the current period only. That's true. So these are the four answers for this: true, false, true, false, true. All four fives. Let's see the next question. So dear student, let's see next question, which is match the following type. In column A we have obsolescence, amortization, depreciation, depletion, fluctuations. I repeat: obsolescence, amortization, depreciation, depletion, fluctuation. And on the column B, which we have to match it with, there we have deterioration in the value of an intangible fixed asset, gradual and continuous decline in the value of fixed asset, a temporary change in the value of an asset, a sudden loss in the value of an asset, fall in a value of a washing asset. So guys, take your time, write down into the notebook, and please let me know in the comment box that how many of you have did the correct answer. So you want me to give the answer, so please, if you have done, please match the answer, or those who have not able to give all the answers, just write down the answers and just read before the exam. This will going to help you definitely for sure. So guys, for first, obsolescence, this is the correct answer. That is a sudden loss in the value of an asset. Obsolescence is nothing but a sudden loss in the value of an asset. Well, next is amortization. So amortization is nothing but the answer will be A. Option A is the correct answer, which is deterioration in the value of intangible fixed assets. Intangible fixed asset, tangible and intangible, you must be aware about that. That tangible fixed building machineries, intangible is nothing but the copyrights, etc. Then next is depreciation. Well, as the name says, depreciation, it may be straight line depreciation, 10%, 5%, whatever the reduced rate, or maybe flexible. So you get an idea what will be the answer. So option B will be the correct answer, which is gradual and continuous decline in the value of fixed asset. The next is depletion. So depletion is nothing but the fall in value of wasting asset, fall in a value of a wasting asset, that is depletion. The next is fluctuation. Fluctuation is a temporary change in the value of an asset. Fluctuation, as the name suggests, fluctuating the thing, and the temporary change in the value of an asset. I repeat, obsolescence, option D was the correct answer. That is a sudden loss in the value of an asset. Sudden loss in the value of asset is nothing but obsolescence. Amortization, you know very well, deterioration in the value of intangible fixed asset. Then the depreciation, gradual or continuous decline in the value of fixed asset. Then depletion, fall in value of wasting asset, a temporary change in the value of an asset. These are the answer. So let's see the next. So students, so next question is the fill in the blanks. So first question is all fixed assets except what are subjected for depreciation. It's a very easy question in practical life. You just think, what are the objects or assets which are not subjected for depreciation? Which are the assets? You think building will depreciate one day, machine will depreciate one day. So only land is a thing or asset that are not subjected for the depreciation. So answer will be land. Next question is what referred to the deterioration in the value of an intangible fixed asset due to the fluctuation of time or expiration of legal right. So as you can see, there comes the expiration of time. So whenever time and deterioration words will come, then answer will be amortization. So under the what method ascertaining depreciation lower amount of profit is set aside as depreciation and a higher amount of fund is created for replacement of asset? So well, the answer is sinking fund. Well, under the sinking fund method of ascertaining depreciation, lower amount of profit is set aside as depreciation and a higher amount of fund is created for displacement of asset. Next is question number 4. If on the balance sheet date the development of fixed asset is not fully complete, then it is referred to as a, what will be the answer? So it will be referred as a capital work in progress. I repeat the question. If on the balance sheet date the development of fixed asset is not fully complete, then it is referred as a capital work in progress. Next is, under the accumulated depreciation method of accounting, fixed asset accounting appear in the balance sheet at original cost. The question was, the under the accumulated depreciation method of accounting, fixed asset account appear in the balance sheet at what? So answer is original cost. Let's see the next question now. Well, let's see the next question, which is true or false. State whether the following statements are true or false. So the first question, depreciable amount in the cost of an asset or other amount substituted for the cost less its residual value. I repeat the question, we'll get a better idea. The depreciable amount in the cost of an asset or other amount substituted for cost less its residual value. So answer will be true or false. So it's a true. Next question, depreciation includes amortization of asset whose useful life is predetermined. Is it correct? Depreciation includes amortization of asset whose useful life is predetermined. So yes, correct, whose useful life is determined. Next is, there are two method of accounting of depreciation. Is it correct? So yeah, there is two method, fixed straight line and variable. Next is, provision for depreciation account is a nominal account. Depreciation will not be nominal account, so that's false. Asset charge method of accounting provides more information relating to an asset than the asset provision method of accounting. Is correct or false? Once again I repeat the question, the asset charge method of accounting provides more information related to an asset than asset provision method of accounting. So well, this is the false. So let's see the next question now. Well, let's see the question, which is match of the following question. On the column A we have compensating error, second is error of commission, error of principal, error of omission, single side error. On the other hand, the column B we have entering revenue transaction as capital transaction and vice versa, more than one error, that set of effect of each other, entering to wrong head of account, suspense account, transaction forgotten to be entered in books. So let's see what will be the answer, guys. Can you please judge? Well, the answer first, which is compensating error. So answer for the first compensating error will be B, more than one error, that set of effect of each other, so we have to compensate it. Next is effect of commissions. So well, effect of commissions will be entering to wrong head of account. Effect of principal will be entering to wrong head of account. Next, error of principal. Third, error of principal, whose answer will be entering revenue transaction as a capital transaction and vice versa. Next, error of omission. So well, error of omission is option E will be the correct answer, transaction forgotten to be entered in book. Error of omission means transaction forgotten to be entered in books. Then next is single-sided error. Single-sided error will be nothing but the suspense account. Suspense account is nothing but the single-sided error. So what we will do, we'll repeat this so that it will get remembered to you, all of you. The first was compensating error. So compensating error means more than one error, that set of effect of each other. Error of commission, entering to wrong head of account. Error of principal, entering revenue transaction as capital transaction and vice versa. Error of omission, that is transaction forgotten to be entered in books. Then single sided error, that is suspense account. So let's see now the question next. Let's see the question, which is fill in the blanks type. So the question is, rectification entries are also known as what? So the guys, just think, rectification entries are known as correction entries. Rectification or corrections, these are the same names. Next is, what entries are passed only for those ledger account balance that are carried forward from an earlier accounting period to the current accounting period. From earlier to current what? So well, opening entries are passed only for those ledger account balancing that are carried forward from one earlier accounting period to the current accounting period. So opening will be the correct answer, opening entries. Okay, let's see third. What entry is passed with the closing balance of sheet? Asset, liabilities and capital accounts in the last period balance sheet. I repeat, what entry is passed with the closing balance of asset, liabilities and capital account in the last period of balance sheet? So will answer will be opening entries. Next question is, when gross loss is transferred from trading account to profit and loss account, fill in the blanks, what account gets credited? So in that case, trading account will get credited. I repeat the question, when gross loss is transferred from trading account to profit and loss account, then trading account gets credited. Next is preparation of trial and what balance. Fill in the blanks are there. Preparation of blanks and blanks are there happen to be cut off point in the process of rectification of error. So well guys, preparation of trial balance and final account happen to be cut off point in the process of rectification of error. So well, these are the answer for rectification entries are known as also correction entries. Second was the opening entries are passed only for those ledger accounts balance that are carried forward to earlier accounting to the current accounting period. Then next question was that is opening entries is passed with the closing balance of asset, liabilities and capital account in the last period balance sheet. Well, next question was fourth, when gross loss is transferred from trading account to profit and loss account, then what account get credited? So trading account get credited. Then last is preparation of what happened to cut off point for the process of rectification of error. So process of rectification of trial and balance and final accounts to be cut off for the point of process of rectification of error. So these are the answers. Okay, let's see the next question now. Let's see the question next, which is true or false based question. In opening entry, the accounts appearing in the asset side of the balance sheets are debited and those appearing in the liability sides of balance side is credited. Is it true? So yeah, right, absolutely correct. So well guys, asset side of balance sheets are debited, well the liability sides are been credited. That's correct. Next is all real accounts are closed at the end of an accounting period by passing a closing entry. Question was, all real accounts are closed at the end of accounting period by passing a closing entry. Is it correct? No, all real accounts are not get closed. Okay. Next question is, when net profit is transferred from profit and loss account, it is the capital account that gets credited. The question was, when net profit is transferred from profit and loss account, which account, I mean like the capital account gets credited? Is it right? So right, capital account gets credited. Next is rectification of double entries, double side error will never involve suspense account. That's false guys. Rectification of double entry error involves suspense account. Next, for rectifying a single sided error that is identified before the preparation of trial balance, no journal is to be passed. Is it correct? The question was, for rectifying a single sided error that is identified before the preparation of trial balance, no journal entry is to be passed. So answer is true, correct. Let's see now MCQs, objective questions type of from chapter 2, which is counting for special transaction. So the first question is, a bill must be stamped as per what act? A bill must be stamped under Indian Stamp Act. Next is, a bill of exchange must be stamped except what bill? Except demand bill. Guys, bill of exchange must be stamped except the demand bill. Third is, drawer is the person who draw the bills. Next, very easy question was there. Fourth, a P is the person to whom bill money is payable. Bill money is payable. Bill money will be the correct answer. For fifth, accommodation bill is also known as kite bill. Kite, kite bill. Okay, I hope this is clear to you. So let's see guys, next question is true and false type. The question is, A bill of exchange is a negotiable instrument. Is it true or false? So, well, it's true, completely true. Bill of exchange is a negotiable instrument. Next question is, check is a bill of expense. Is it true or false? So, well, check is a bill of exchange, right? You used to give a check to someone. It's true. Days of grace is not applicable for on-demand bills. The question was, days of grace is not applicable on demand bills. So correct. If you're demanding for someone, then you can't take the day of grace. That's true. If the maturity days of a bill turns out as a public holiday, then the due date shall be the preceding working day. Is this correct? The question may get confused, like whether it will be preceding day or whether it will be the after one day. So the answer is preceding this. So that's the true answer. Well, the next is, day of grace is fully applicable for a check. So that's false, guys. Day of grace is not applicable for a check. Okay, so let's see next question. So guys, next question is, match the following type. As you can see on your screen, column A is drawer, column B is debitor, dishonor, non-payment of bill, rebate and creditor. Well, while if you're talking about column A, will have drawer, dishonor of bill, retiring of bill, drawee and nothing. So well, take your time and just do the answer. So for those who have completed the answer, or you can pause the video, I'll explain you the answer. Like first, drawer, so answer will be creditor. Drawer match the following will be creditor. Next, dishonor of bills, second will be non-payment of bill, retiring of bill, that will be D, that is rebate. Fourth, drawee, so drawee will be debitor and nothing is related to dishonor. So all these 5 answer, I repeat, first E, second C, third D, fourth A, fifth B. Let's see the next question now. Well, the next question is again the match the following type. As you can see on the screen, here is the match the following. So let's see the match. The first question is overriding of commission. So what will be the answer? Overriding of commission, the option will be C here, extra commission. Overriding, as the name says, override, so it's extra commission. Okay, so let's see the second question. Consignment inward account. So the question is consignment inward account. So just think consignment inward account consignment. So answer will be second will be B, temporary recording of consignee. Temporary recording of consignee, consignment inward account. So next C, del creditor commission. Third E will be the risk at bad debits. Fourth is normal loss, so which is evaporation of material. And next is abnormal loss, that is good lost in transit. These are the very easy two last question, like normal loss evaporation and abnormal is lost. Third was that is D, creditor commission, that is risk at bad debits. And consignment inward account, that is really complicated, that is temporary recording of consignment. So guys, I hope all this is very clear to you. Let's see the next question now. So guys, next question is fill in the blanks. The first question is, the loss of goods which occur due to inherent nature of goods involved in referred to as what? Repeat the question. The loss of good which occurred due to inherent nature of the goods involved is referred to as normal loss. Second is, the commission that is payable by the consignor to the consignee for bearing the risk attached to the credit sale of the good is called del creditor commission. Del creditor commission. I repeat the question. The commission that is payable by the consignor to the consignee for bearing the risk of attached credit sale for good is called del creditor sale commission. Next question. The document sent by the consignor to the consignee along with the goods sent on consignment is pro forma invoice. Pro forma invoice is the document sent by the consignor to the consignee along with the goods sent on the consignment. Let's see the question number 4th. At the end of the accounting period, the consignee prepare a document called what? They said that at the end of the accounting period, the consignee prepare account. As the consignor said, that is pro forma. So what about the consignee? That is account sales. Okay, so this is prepared at the last. Okay, so last is question 5th is, the party who sends the goods on consignment basis is referred to as the party who sends the good to consignment basis is referred to as the consignor. Okay, so let's see the next. Guys, let's see if the next question is true and false type. The consignor may require the consignee to send an amount as advance or security deposit for the goods that are sent on consignment. Is it true? So obviously may is there, can be there. So yeah, options are there. Obviously it can. Next is consignment sales can be made both only on credit basis. That's not true. That's false. Consignment sales can be made both only on credit basis. That's not correct. Next is Dell creditor commission is calculated on the value of credit sale made by the consignee. That's false. No, Dell credit commission is calculated on the value of the commission given by the consignor. Next is the goods sent on consignment may be recorded by the consignor either at cost price or at the invoice price. That's true. It should be recorded on the cost price or the invoice price. Well, the consignment debitor account is always maintained in the book of consignor. That's false. Consignment debitor account is always maintained his own. Why will we maintain on consignor, right? So I hope this is done. Let's see the next question now. Well, the next question will be on joint venture account. So it's a true and false type. So first is state whether the following statement are true or false. So first question is joint venture has very long life. Is it false or true? So that's false, because joint venture will have not a very long life. Next is co-venture and co-partner are interchangeable terms. Co-venture and co-partners are interchangeable terms. No, that's not correct. It's a false again. Parties of joint venture are known as co-venture. That's cool. That's correct. Parties of joint venture are known as co-venture. That's true. Next question is question 4. Joint venture and partnerships are synonymous terms. No, that's not correct. Joint venture partnership is different thing. Next is 5th. Co-venture work for commissions. That's false, not correct.